Hi everyone, welcome to the 11th of our lecture recaps for CIMA P3 Performance Strategy. I want to just look at a couple aspects of audit that we haven't touched on, just to clear it up. So the first aspect was social environmental auditing. Firstly, the social side of this, well, that relates to really how the business contributes to society, and various aspects may come into this, such as donations, sponsorship, education, health and safety. All of these will contribute to society and are part of the social side. Now, a social audit may entail internal audit, having a look at each of these areas and seeing are they fulfilling what they have said they are going to do or what they have planned to do. On the environmental side, well, first of all, there'd be a report. In the annual report, there'd be a report as to how the business has fulfilled its environmental objectives or its environmental requirements. So there'll have to be an auditor statement with that report stating how the auditors found they had performed. The contents of this will be centered around things such as sustainability, targets achieved, targets that were set, did they achieve them, compliance with regulations, and legacies, for example environmental cleanups and so on. So the auditor may have to report on these. However, we do have to remember that these may require expert or specialist knowledge. It may not be a case of the internal audit or financial internal audit function being able to actually audit these things. Yes, they can see if targets were achieved, but they may require specialist knowledge, which may require outside assessors. So do remember that. So that's our environmental and social audits. Another type of audit undertaken by internal audit will be a management audit. This is really a type of operational audit. Its focus is to identify managers' weaknesses and then to rectify them. So, objectives then, what are they seeking to do? Well, they might want to refocus resources. By undertaking an audit, they'll see where the best use of resources will be. They'll obviously want to improve efficiency, improve effectiveness, just thinking back to our value for money audit. They'll assess the service that's being provided. They'll identify the cost savings that can be made. And of course they'll always seek to improve governance. The elements then to a management audit. Well, first of all, they'll review policies. They'll also review the workflow and the workload on each department to see, is there too much, too little, how quickly it's being done. Remember back to the efficiency and effectiveness. They'll then evaluate that system. How well is it working? And then they'll review the practices within the department. All of this then will feed into a cost analysis. Remember, our cost benefit analysis. The findings then, well, the sorts of things that they'll be looking for, is there a lack of knowledge within the department? Are they technically able to carry out their jobs? Is there a lack of delegation by senior management? Have they missed lots of targets that they set for themselves? The systems in place may also be inadequate, and there may be poor communication throughout the organisation. This may all stem from something such as poor leadership. So that was a management audit. So what is a systems-based audit? Well, we've already looked a little bit at systems-based audits with our tests of control and so on. So it's an audit of internal controls. Now these will generally focus on the accounting system. The aims of a systems-based audit, well, you want to identify the weaknesses within the system. You'll also assess the risks, and you'll look for inaccuracy, those fraud and errors that we've been talking about. How do we do it? Well, we identify the objectives of the system. We identify the procedures. Remember our internal control questionnaires, our internal control evaluation questionnaires. We check then, does the system meet the objectives? And are the controls adequate? And of course then we will report our findings to the audit committee. And that's just a quick tidy up on what was left of audit.